This is The Gist, the essential podcast for the discerning listener.
Welcome to The Gist. It is Friday, July 17th, 2026. I am John.
And I am Mary. We are your smart friends on the go. Let us dive into today's news.
Let's start with the gist view. Today, we are looking at a massive clash between artificial intelligence and geopolitics. Eoptolink Technology just filed for a $5 billion IPO in Hong Kong.
Eoptolink is a major Chinese manufacturer. They make optical transceivers. Think of these as the critical hardware connectors that allow massive data centers to talk to each other at lightning speed.
Without them, the artificial intelligence boom stops dead. And this IPO proves a major point. The sheer amount of money needed for artificial intelligence is completely overwhelming Western attempts to contain China.
Exactly. Washington has tried hard to decouple the United States tech supply chain from China. They successfully blocked Chinese firms from making the most advanced microchips.
But artificial intelligence needs more than just advanced chips. It needs miles of foundational hardware. And investors know they cannot build out global artificial intelligence without Chinese optical gear.
It comes down to basic arithmetic. The capital flows directly to the physical supply chain. It routes right around government roadblocks.
It feels a lot like 1982. Back then, the United States tried to embargo a Soviet gas pipeline, but Western allies defied the sanctions anyway. Why? Because they needed the physical energy infrastructure.
Today, US capital ignores the friction for the same reason. Investors want exposure to the artificial intelligence boom. Eoptolink provides the critical hardware for large artificial intelligence models. So, who benefits? Global investors and Chinese hardware makers. They win the resource flow, while government containment efforts fall short.
Spot on. Let us zoom out to the global overview. Over in London, the Haldon Group is raising billions of pounds in private capital.
Haldon is a massive insurance broker, but here is the power play. They are using deep pools of private money to fund a massive expansion.
Right. They plan to go public, but not until 2030. By staying private now, they delay having to deal with the strict regulations of the public stock market.
They get to gobble up market share without public scrutiny. Deep private liquidity is a superpower here. It buys them time and structural freedom.
Meanwhile, Donald Trump's Truth Social is rolling out a new premium tier, but it is not for casual users. It is for algorithmic traders.
This is fascinating. Truth Social is giving high-frequency traders priority access to Trump's posts. It is the pure monetization of an information advantage.
Exactly. If a political post is going to move the stock market, these traders want to know a split second before anyone else. Truth Social turns political noise straight into high-speed financial data.
Speaking of speed, look at the Gulf of Oman. United States-sanctioned oil tankers are constantly zigzagging to evade blockades. Bloomberg notes this ongoing maritime standoff is adding a permanent geopolitical risk premium to global trade. Basically, moving goods by sea is just permanently more expensive now.
And back in the tech world, the nature of work is fundamentally shifting. Stripe just released some wild data. The number of single-person companies making over $10 million a year has doubled in just 2 years.
This is the artificial intelligence effect. Early adopters are using automated models instead of hiring teams of people. They bypass the friction of human resources.
Who benefits? The solo founder. They keep the capital accumulation completely centralized. The future of corporate growth might just be one person and a server rack.
Let us bring it home to the European perspective. The European Union is overhauling its carbon market. This is the Emissions Trading System, or ETS.
Under the ETS, companies essentially have to buy permits to pollute. The European Union Climate Commissioner, Wopke Hoekstra, just proposed slowing down how fast these permits disappear.
Starting in 2031, the annual reduction rate will drop from 4.3% down to 3.7%, and heavy industry will get free permits all the way until 2037.
Why the rollback? Because strict green rules were threatening to bankrupt European factories. Decarbonization mandates always bend when industrial survival is on the line.
But there is a catch. States now have to direct half of their annual carbon revenue specifically toward green tech. That is €24 billion a year.
So the ETS is shifting. It is no longer just a punitive market designed to punish polluters. It is becoming a massive state-directed subsidy scheme for green industry.
Heavy industry gets a lifeline, and green tech gets a massive influx of cash. Over in France, the conglomerate Dassault Systèmes is flexing its wallet.
They are in talks to buy a United States software company called Aris Global for about $2 billion. Aris Global makes software for drug trials.
This is a huge play for medical data. Dassault is buying Aris Global from a Swedish private equity firm. They want to centralise pharmaceutical data infrastructure. Whoever owns the trial data owns the future of life sciences.
Finally, a big cultural shift in Germany's workforce. Ministers are moving to scrap the day one sick note mandate.
Right now, if you call in sick, you need a doctor's note immediately. The government wants to introduce Karanztage. These are unpaid waiting days.
The goal is simple: cut the red tape. The current rule is a massive administrative headache for employers. By dropping it, they relieve the paperwork burden on businesses while changing the financial incentives for taking a single sick day.
All right, let's check today's temperature. Across the board, pragmatism is beating ideology. Artificial intelligence's thirst for capital is easily punching through international trade walls. Private companies are dodging public regulations to grow faster. And in Europe, strict climate rules are bending to keep heavy industry alive. The common thread? When massive resource flows hit a regulatory wall, the money always finds a way around.
That is the wrap for Friday, July 17th.
If you found today's breakdown useful and want to stay ahead of the curve, come join us over on the newsletter. You can subscribe to The Gist for free using the link in our show notes. It takes 10 seconds and it is the best way to get this intel right in your inbox every day.
The Gist, News Digest, and podcast are entirely written and produced by artificial intelligence. The Gist is out 3 times a day, every day, providing you with a liberal perspective on what to expect next. For more information and donations, visit thegist.online. Thank you for listening.